Hi guys, in today's video I'm going to be talking a bit more about some of Vanguard's most popular funds, the Life Strategy funds. Later in the video I'm going to be showing you all 5 funds up against each other in an easy to follow chart, seeing how they've performed recently. Hopefully this is going to help you decide which one could be best for you. Thanks for visiting my channel Free Your Finance. My name's Gary and I'm discussing my journey towards financial independence. I talk about investing, property and savings, so if this is something you may be interested in watching, please hit the subscribe button below. So first of all, I'm presuming that you have a basic understanding how market indexes work along with investing in index funds. If not, I'm going to put a link up here to my last video explaining all of this in hopefully an easy to understand form. Feel free to go and check out that video first and then come back to this one. However, if you do understand market indexes and index funds, let's get cracking. I just quickly want to say, don't forget I'm not a financial advisor. I'm only giving my personal opinion on what I do. It's important that you make your own decisions, and if you need financial help, go and seek the help of a professional financial advisor. So Vanguard currently offers 79 different funds, 5 of which are their Life Strategy funds. The Life Strategy 100, 80, 60, 40 and 20. The number in the name represents what percentage of it is made up with stocks, the remaining percentage being made up of bonds. So for example, the Life Strategy 60 holds 60% stocks and 40% bonds. Often they are known as something called funds of funds, as they are made up of various different index funds. So if we look at the holdings of the Life Strategy 100, you can see it's made up of 10 different index funds at various percentage holdings. So for example, we have 19.5% made up in this FTSE UK All Share Index Unit Trust. We have 19.4% in this US Equity Index Fund. There's even some S&P 500 fund there that we spoke about in the last video, along with 7 other index funds. This means by holding a Life Strategy fund, you're making your portfolio even more diversified than owning just a single index fund. Depending on exactly what Life Strategy fund you pick, you'll hold somewhere in the region of 6 to 20,000 different stocks and bonds. You can't get much more diversified than that. Bonds are introduced to reduce volatility. They are often shorter term investments that have less risk to big drops. However, with less risk also comes less reward. Bonds often don't offer very large growth, so a lot of people introduce bonds as a safety net to their portfolio. This is especially the case as people are getting older, or when people are getting closer to the date that they need their investment back. As you can see from this chart of the 5 Life Strategy funds, with the funds that hold a higher percentage in bonds, they are lower risk with lower reward and suit someone with shorter term goals such as 3 to 5 years. However, scrolling along the chart, as we introduce more shares to our funds, they include higher risk yet higher reward. These will suit someone with longer term goals such as 10 or more years. So you may well be asking, well, how much of my portfolio should be made up of bonds? It's a great question, and unfortunately it's one I can't give you a direct answer for. Some people do say there's a rough calculation telling you how much of your portfolio should be made up of bonds. Basically, you take the number 100 and take away your age. The number you are left with is how much of your portfolio should be made up with stocks. So for example, I should have a 70% stocks and a 30% bonds portfolio. For me, this is way too conservative. However, please do bear in mind, I do have quite a risky approach when it comes to investing. Others that I have read also agree, in their opinion, it's too conservative. And some suggest starting the number at 110 minus your age. Personally, I ignore all of this advice, and right now, my portfolio is actually made up of 100% stocks. I am happy to accept more volatility for potentially more growth. Of course, just like always, it's so important for me to tell you, you should make a choice that suits you. All of us have such different financial aims, so you need to make sure you pick a portfolio allocation that suits your needs. There is one thing I should quickly mention about volatility, which is really important for you to know when you're investing in the stock market. Let's say, for argument's sake, your portfolio is worth £100,000. If your portfolio drops by 50%, which has happened in the past, your £100,000 drops to £50,000. However, to get back to your original £100,000 portfolio, you now need the market to actually rise by 100%. The argument is, by introducing bonds, it could reduce those big drops. Some studies say that having a small percentage of bonds in your portfolio can actually very slightly increase your portfolio performance. So now we're going to spend a little bit of time comparing the 5 different life strategy funds. As you already know, they're made up of different amounts of stocks and bonds depending what fund you pick. I'm currently recording this video in June 2020, and we've recently had quite a big drop followed by quite a fast rise in the stock market. This has been caused by the coronavirus and the effect it's had on the world economy. I'm going to flick over to a website called Morningstar. I really recommend this website, and it's great for researching funds that you're interested in potentially investing in. On this website, you'll see it has this very useful comparison chart. So I've loaded all 5 of the life strategy funds, and we are looking at the chart since 2011. Now, although the funds start off going up and down, and the funds with more bonds actually start off slightly better, I want you to concentrate further down this graph. The funds are actually in order of the allocation of stocks. So the one with the most growth is the 100% stocks, then the 80, 60, 40 and 20. It has performed exactly how we would presume it would have done. So the funds with more stocks have done better, and the funds with more bonds have done worse. So now we're going to take a look at a much shorter time horizon of just 6 months. You may be able to see that the order of the funds have actually completely turned upside down. As I already said, we've recently had quite a big drop in the market, followed by quite a fast rise too. What this chart shows us is the funds with more stocks dropped much harder than the funds with bonds. And you can actually see that over 6 months, currently you would have the most money if you're in the Life Strategy 20 fund holding mostly bonds. As with the last graph, these are actually in perfect order, but the other way round. So it goes 20, 40, 60, 80, and then 100 doing the worst. Again, this proves the point of holding bonds in your portfolio reduces the drops when market crashes come. You will still get a crash, but it won't affect your portfolio as hard as holding a larger amount of stocks. So hopefully these 2 graphs have shown you that if you have a long-term investing horizon, then stocks can help you achieve more growth. If you have a shorter term horizon and potentially need your money back sooner, then some people decide to introduce more bonds to reduce volatility in their portfolios. One other thing to let you know about is you can transfer your amounts between different life strategy funds. So if you started in Life Strategy 100, you can move your portfolio into one that involves more bonds as you get further down the line and closer to your retirement age. Now, as I always say, I don't believe you should ever be investing in the stock market for just 6 months anyway. This is just an example showing you how bonds have helped in this recent crash. So just to quickly summarise some of the benefits of holding a life strategy fund. They are very diversified. As I've already mentioned, they can hold anywhere between 6,000 to 20,000 stocks and bonds within your fund. This is even more than holding an individual index fund like we spoke about in my last video. They charge very low fees for the fund. Vanguard charges just 0.22% as an ongoing fee for this fund. And finally, if they're held within a stocks and shares ISA, any gains that you receive will be tax-free. The only real negative of the life strategy funds that I can think of is they are very heavily weighted in the UK markets. Now, although this is a negative for me, some people might like having their portfolio made up heavily of UK stocks and bonds. Again, this is a choice you're going to have to make. I really hope today's video has helped a little bit explaining about life strategy funds. I think they're a really fantastic, easy fund, especially when you're starting up your investing portfolio. If you already invest in life strategy funds, please leave a comment of which one you picked in the comments below. If you'd like to see more videos similar to this one, as well as videos talking about my buy-to-let investments and my savings, please hit the subscribe button. My face should now be popping up on this left side. Just click that, hit subscribe, and hopefully I'll see you soon. Take care.